afternoon, David here with Weekly Week Look. Today is Sunday 18th of June. This video goes out 4:57 p.m. in the afternoon. So obviously markets closed and we're looking at the November 2017 UK wheat chart, and we start with the yearly chart in front of us. Sorry to be a bit confusing, this is just my notes on the yearly chart, just to give you some indication the work I've been doing to try and get some idea of where the potential of this recent rise is coming. Looking back, this is the last 30 years. I'm just trying to follow through with swings at the moment, if you bear with me. Basically, we had an up move in up to 2007, then a pullback to 2008. Then we had another, this is sort of an A, B, C correction wave up to give us a high here of over 220. This was in 2013, and obviously what we've had since then, we can see here, we've had this down move here, which has given us the A wave. We're looking at a retracement of a down move at the moment. If we're looking at retracement, then B would come in somewhere around about the 152, which would be a 38% retracement of this move down. So that's an interesting one. And then if you're looking at the reverse of that, and this is the start of a new upwards trend of the last 10 years, then you've got an A, B, C move up, and this is the B here that's came in at 110. Projection wise would give us a first target at 152, 165, 168, 178. So 152 is both projection going down as well as up. So that is a very interesting level on a long-term basis that we look to be tested, and then that will give us an indication of whether we're breaking this 4-year downwards trend, or it would be seen as a good selling opportunity, because obviously what we can see here that we've still got this downward move that happened from 2013 down to 2015, which is the one that's being retraced. So it's all to play for at the moment. What we can see initially is we're still in an upwards trend, and this level we would expect to be tested. But let's go down and just see the plain yearly chart. We've been keeping an eye on over the last year. We can see here that the SMA 60 comes in at 144, and on Friday night we close at 144.70, so 10 pence above it. This is crucial. It hasn't been tested for the last 4 years. Back here in 2010, obviously we can see it broke up through, and then we had this big expanding candle here, and we were way in a 3-year upwards trend. So we're at sort of the crucial point here. Obviously, first target we would look to achieve would be the 150 or the 152 level. Let's go down into the monthly chart. We can see here the breakout. We can see the big candle forming, and we can see an upwards trend in place. Down at the weekly chart, we can see here clearly the upwards trends are still easy to see on this chart. We can see the 2 previous swings high, and we can see this big candle here, the closing of the week, 144.70. Go down at the daily. We've identified a upwards triangle, 2 swing high points here at 142. We gapped up through it early in May. We came back, we were about test it. We gap filled early in the week, and now we have the breakout. 144.70. My target's 152, which comes from the base of this triangle being 131 to 142. So that would give you 10 to 11 pound from the breakout. Add it 142, that takes you 152. Stop we've identified earlier in the month at 137, which was the last swing high back in August. So we would expect to see an upward continuation of the trend. We've got a breakout situation. We'd expect to see this continue, and obviously we would like to see it make 152, which would tie in on our original first yearly chart, which then would give us a point of either it would be a long-term good sell against a falling trend, or we are changing and we continue on up to our upward targets, which we have in place here at 165, 173. We'll put an update this time next week.